I'm Krista, and this is Kayla, and we're here to help you be a better landlord. So we're here to talk today about 1031 exchanges. Now, that is a like-kind property exchange that intimidates a lot of real estate investors, so I'm so thrilled to have you here.
Thank you for having me, TurboTenant.
Of course. So as the expert, what is a 1031 exchange?
Yeah, so a 1031 exchange was created in 1921. Wow. It's essentially a way in which you can avoid capital gains taxes through the exchange of property. Say you have a duplex, right?
Okay.
And you are like, okay, I leveraged FHA to get into this duplex. I implemented some value add strategies. It's a prime time for me to sell this property. And with the appreciation, I can essentially invest in a larger down payment to have a better cash flow on a larger investment property. So within that, you have a 45-day identification period where within 45 days after selling your property, you have to have 3 properties in writing at least identified. And then you have to close within 180 days. And then instead of having the taxation on capital gains, you're able to have a non-taxable real estate exchange.
Tell me a little bit about the like property portion of 1031 exchanges, because ideally you are taking one type of property and finding a like kind, but what does that really mean?
That's a great question, actually. A like kind property is essentially any sort of investment property that has a rental income. Land also always counts as 1031.
Wow.
And oil can count as 1031 as well. Huh. A good rule that I do is always try to trade equal or higher. So trading to a property that's of equal value or a higher value, because then you're able to increase your cash flow or maintain the same cash flow.
Beautiful. Okay. So let's say that I'm starting my first 1031 exchange.
Yeah.
I have a duplex and it's worth $400,000. How would you start looking for a property that would be considered like kind?
Right. So first off on there, I would ask how much debt you have on that $400,000, because that's really that debt is going to have to be serviced no matter what. The money that you're going to have is going to be the capital gains, and those capital gains will have to be enough in order to implement a down payment on there. If you have a duplex that's worth $400,000, so let's say $200,000 a door, pretend there is $100,000 in debt on it, you're going to have $300,000. So with that $300,000, you could go multiple verticals, and it's just going to depend on the client's motive and what they want to do with that $300,000 down payment. You can get into a 4-plex, an 8-plex, or you can completely pivot and find a property that is suitable for your business. And the biggest thing I suggest is always make sure that you have an expert who is well-versed in commercial as well as residential real estate in order to help counsel you to get that best return.
That said, people get really nervous about 1031 exchanges, either because they think it's too complicated or because they're not sure of the rules.
I understand why 1031 can be overwhelming, because if you don't understand tax law, you're essentially in a vulnerable place. But that's why it's required when you do a 1031 that you have a QI, which is a qualified intermediary. Mm-hmm. And they essentially have no fiduciary duties to the seller or the buyer. But their job is to ensure that all of the proper tax compliance and tax law is in place. It's a one-time fee, but you're going to need a QI for any 1031 you do. And if you really have educated brokers as well as a really strong QI, we're able to walk you through that process in a white glove service.
Could you tell us some real-life examples of the gains that people could expect to see, or why people actually do this, maybe with some numbers?
Yeah, absolutely. So I think that 1031 is really the ultimate tool for accumulating wealth through real estate. And, you can go into we'll stick with Denver just because it's our local market with an understanding of Denver, TurboTenant. You can get into a property leveraging FHA, putting 3.5% down on a duplex, and pretend that duplex is worth $600,000. So if we're putting 3% down on $600,000, you need a little over $20,000. With a little over $20,000, you put it into the property, you hold it for a couple years. That property is, on average in the Denver market, properties accumulate at 15%. So you're getting a 30% accumulation on that, excluding any sort of value add components you put in, like new finishes and, pretend you want to improve the landscape, Some people say paint lipstick on a pig. I say make the property beautiful.
Yes.
So if you're going in and you're beautifying the property, pretend you put $50,000 into improvements on it. So all in all, you put in $70,000. You're leveraging your debt, and it increased in value by about $200,000 with the work you're putting in. You essentially made $125,000, give or take, in a few years just from having real estate.
Wow.
And then from there, you can always trade up. And when you trade up, you get higher cash flows on it. And when you have more assets on your portfolio, you're able to diversify as well. And you could take out asset-based loans and asset-based mortgages in order to help stimulate your personal real estate portfolio. And, in anywhere from 5 to 10 years, you could have upward of 5 properties that are all cash flowing, and you're able to really, truly have financial freedom.
Wow. Okay. So it really builds.
Yeah.
Unlocks a lot of opportunities down the line for you to be diversified, having cash flow just flowing in.
Yep.
That is beautiful. And you've seen it work for yourself as well.
Yeah. So it's a tried and true method. I'm fairly new into investing for myself. I worked really hard on it. I own a condo in Congress Park. I'm holding that condo for a couple years, and I plan to 1031 it into a duplex.
Nice.
Also this year, I am leveraging my FHA. I'm going to forego my commission on a fourplex. I'm personally looking in the Colorado Springs market because it's a little lower of a price point to get into. So I'm planning on investing in a fourplex there and going through the house hacking process myself.
Incredible.
Yeah.
I hope we get to be there along the way.
Absolutely. Yeah. And I highly suggest TurboTenant too. I've used you guys for all of my tenant real estate applications. I've had 100% success rate with all of the background checks and verifying. I love my tenants in my condo right now. And I don't think that I would have been comfortable moving forward without a comprehensive background check that TurboTenants provided for me. And it wasn't any cost for me as the landlord. My tenants paid $50. I had a credit report, background check right in front of me, and we were able to execute a lease fairly quickly. And I suggest TurboTenant to all my real estate clients who are investing in residential.
That is so fantastic.
Yeah.
Thank you for sharing. That really fills my cup.
Absolutely.
Well, I really appreciate having your time and expertise in the building. What an honor.
Well, thank you.
If you want to find Kayla, where can people look you up?
Absolutely. So you can look me up on LinkedIn. My name's Kayla Mahoney. I am also known as the Denver Commercial Broker. And check out capitalpropgroup.com.
If you have any questions about 1031 exchanges or you have experience of your own, please drop it in the comments below. Don't forget to subscribe.